Hello, everyone. Hello, gladiators. How's everyone doing today? Hi, Ron. Necktie, how are you? Hello, Windsor. Great to see you hanging out in Face. Hope you're enjoying Face. What's your opinion? I think it's better than LAR. Hello, Glenn, Mark, Kimster. How are you? Who else is here? Ryan Cook. How are you, Ryan? I'm looking for familiar names. Moro Gomez. Luca's in the house. Hi, Luca. Jess is here. Ardianto. Have a lot of my crew here with me today. It's always nice when my friends follow me from place to place. Okay. So yesterday I made the point. I showed the cable. GM Luca, how are you guys? So I showed the RSI reading on the 1 hour and the pound, saying that this would not be the low, right? Give me why if you remember that yesterday. We were up here. Nick said it looks like an ABC. What do we have here? We have a new low. Okay, so here's a teachable moment. Next time you see confirmed lows and confirmed highs, meaning prices confirmed by the momentum indicator, I happen to use RSI, standard 14-day. What makes it actionable? What are you going to look to do the next time you see a confirmed low? And say you miss this whole decline. Well, what makes this information actionable? What are you going to do after you notice that? It's a little mentoring, you know. It's not the main purpose of Face. No. What's it tell you? If you have a confirmed high, as a trader, what do I do with that information? Close, pretty close, team. You know, it didn't tell you to take profit. Waiting for the next setup is correct. So when you see confirmed lows, as a trader, I'm looking to sell a rally, knowing that a confirmed low is going to be followed by another low with high probability, right? So you had a nice little ABC. Yeah, it could have rallied further, but you had a nice rally from this low to get short, and here's your new low. This low did not confirm. So it's really your first divergence. It didn't tell you to get long, but it told you if you took the short, we no longer have a confirmed low, right? But the actionable part of this analysis was a confirmed low. As a trader, I should be looking to sell a retracement, sell a rally. Give me why if you understand that. So this may have been the low, but there still could be a third drive here. But give me why if you guys understand that. When you have that confirmed low. I mean, it's golden. If you just have this one piece of knowledge, it's going to give you plenty of ideas. You know why? There are many confirmed highs and there are many confirmed lows. So even if you miss the move into a confirmed high or low, you're going to get a retrace, and you know when it's confirmed there's a high probability of another high or another low to follow. Capisce Mondo? Okay, I'll take my coach hat off now. Right. So I didn't buy it down here. I'm not short here either. I do want to show a look from someone else I've traded with and mentored. It's from Cyric. He has a bearish shark in Kiwi dollar. Cyric's been here in Face. It's been here in LAR. Looks like target is 69.40. Yesterday I said it was starting to look tired. It had another high in it. Let's just take a look at the Kiwi. The Kiwi's still stronger than the Aussie. But there's your 1 hour. You have 1, 2, maybe they could eke out another one. But the 4 hour looks pretty negative to me. You have multiple divergences. In fact, it's been diverging all the way back since this high, which was the 23rd of May. So I like the potential of a top pick here in Kiwi, risking maybe 65, 70 pips for initial targets at 70.28 and possibly 69.80 to 60. Give me a Y if you're with me. And also I saw something by Grega. There's 2 different counts in Euro Pound. And Euro Pound, yesterday we talked about it here that we could get one more high. It looks like we may try one more high. We haven't taken it out here. This high is 50. This high is 47, 48. So at new highs, if I was long Euro Pound, I'd be taking some profits because there could be a surprise. The reason I say that is the Dixie, to me, I don't think we're going to shoot down to new lows right away. We're 97.10. I still think there's a possibility that this was one part of the correction. We're still getting a higher low, and that we could get another rally back to 98, maybe even 98.50. So those are a few of the things I'm looking at. The Guppy, we have a 3 driver right here. See this 3 drive? Pretty classic on the 4 hour. I don't want to go to the well on it for a short, and I'm not ready to buy it yet either. And what gives me pause is there was a new update on ForexAnalytix, and it's Grega's. So Grega's looking for some lower numbers. Looks like about 140, 139.80 before we get some type of bear market rally, and this would complete the C wave. So Grega's count gives me pause to not trade that 3 drive to a bottom. So there's a look for you. And let me just show you the EG. What gives me pause up here now is another count by Grega. He has 2 counts on Euro Pound. I think it was up here streaming it. You got to get these updates. Here it is. So Greg is open to the possibility that we could be topping up here in maybe another 10 pips and get a pretty good ABC. So this is one of the scenarios that we fail here. And this would favor the euro for the short. So I'm still looking at euro. I think euro might even be a short right here with stops over the high. Take a quick look at it. And then I'm going to see who else is here with me today. Everyone kind of know where my head's at on the markets. Aussie Kiwi doesn't look ready yet, but it's getting closer. We are diverging here in Aussie Kiwi. But maybe we still could have one shakeout in the euro before we make a new high. Maybe this is the first part of the corrective wave, and maybe we're going to end it here and still head back down into the under the 111 handle. I can't get long here. Yesterday, yes, when we saw EG, but not here. So let's see who's with me today. It points to 1260. You could be right. You mean this flag right here? Uh-huh. You could be right. So if you want to be conservative, wait for the flag to be negated. Oh, hi, Diego. I showed your shark in the kiwi. Okay. I think we have a full house here. Let's see who's here.
Hi, it's Nick. I love that shot.
Hi, Nick. What
I
shot?
like that shot. I'm not, you know, the shark isn't my favorite pattern, but that is a very valid pattern in the TV.
Okay. So, yeah, you know, Cyric, who's a new father, and
congratulations.
He didn't give birth to a shark. At least we don't know that yet until his son is in his, I'd say, 30s. Gonna have to wait, Diego, until your son's in his 20s or 30s to find out if he's a shark. But if he's like his dad, he's gonna have a giving spirit. And that was Diego's look on that shark. What are you thinking today, Nick? What's on the radar?
Bullish stocks today, last day of the month. So everything just looks like everyone seems to be selling, and it's just going higher.
Yeah, I noticed on FA you have something like 2460-ish.
See that correction since the 25th? That's like a little ABC bull flag. I think it's going to keep going higher. Yeah, you know, long bull runs tend to end on butterfly patterns. Okay. And that's going to take us to like 2455, 2460 from here. And Amazon will probably be 1050, 1060 then. Yeah, and then in basic technical analysis, you know, if this is a bull flag, then you look at the length of the handle or the pole and you project it, and that's where we end up too. So I kind of, I'm feeling a bit bullish. And the currencies are a bit dead. And I'm kind of bearish oil, that's all, same old.
Yeah, you called that yesterday. So we're
it won't help gold.
You love gold?
If we do rally in all the stocks, though, it won't help gold.
Okay.
It will not help gold.
Okay.
So we'll see.
I was wondering if you had I looked at Greg's look on Euro Pound. He has a couple of counts here. You think we're about to run into trouble with anything harmonic up here at new highs, maybe 760-ish?
Oh, you know, we're definitely at a level that could cause us trouble. Yeah, and you know, the Euro Pound loves an 886 retracement as well, so that's just under that high. We're kind of right there. But I'm still pretty bear. I really do think that the pound is a dodgy bet until after the election in the UK.
Okay. All right. So that, definitely. So you don't want to.
And you know, especially, the polls that come out of the weekend. I mean, look what happened last night, just on a poll that said it might be a hung parliament. So, and they all tend to come out at night. So it's quite a lot of risk you're taking with the pound. So
that's why the pound sold off late in the U.S. session. Okay,
exactly.
I got it. So, you know, basically what Nick is saying is throw your charts away until after the election, because there's a lot of...
I wouldn't say throw your charts away, but be very careful with your risk, because, you know, a little news event can knock you out. Like, don't be, you know, popping out without putting your stop in and stuff. Because that'll kill you. So, that's all.
What's happening in crypto land today?
Oh, you know, Ethereum is continuing to outperform Bitcoin, but otherwise no change. Still in a correction, really.
Okay.
Good morning, Nick. Good morning, Dale. Good morning,
Hello.
Nick.
Hi, Steve. How are you?
Greg has got lots of good charts. He wasn't around yesterday.
Oh, Greg is here. Okay.
By the way, Nick, Luca is asking what you make of the YouGov poll.
You know, it fits in with everything that I'm hearing, because everybody I speak to or see on Facebook, or nobody wants to vote for Theresa May. So I wouldn't be surprised if Labour do much better, but I'd be very surprised if they win. I think she will still win. And that YouGov poll, had a massive margin of error either way. So I don't think it was as meaningful as everybody thinks it was. I think it's wide open. We'll see. It's astonishing how badly Theresa May and the Conservatives are doing, considering they called the election. I really think that they thought that they had no opposition, and they're finding out that they have. So we'll see.
Okay.
Okay.
I think Greg is Greg is going to be with us in a minute.
Yes,
We'll get an Elliott view
with his computer, but
then I'd bet $1 million Steve wants to talk for a while.
Yeah, we can actually check a couple of things, as long as Nick doesn't have something else.
No, I'm fine.
By the way, Nick, I agree with you. I mean, stocks do look bullish. We do look like we had some short bull flag patterns both on NASDAQ and S&P. So I'm with you. I mean, we can easily see another leg higher. I mean, it's not going to be the first or last time, and there's absolutely nothing bearish here, at least, I mean, for S&P, as long as we are above 2,380, there is no argument to be short. So there's no question about that. Okay. Dale, what do you want me to do? You want me to take the screen and start going over a few charts? Okay. Let me grab the screen.
Sure.
By the way, I'm really pleased with your guest today. He's a really great guy and a really great follow. Mark,
were you familiar with Mark Yusko before this? Okay.
Yes. And I think I have to say to everybody, we've noticed that attendance drops a little bit when we have guests and interviews, but some interviews and some of the guests we have are, really amazing to listen to, and I think Mark's interview is going to be an excellent one as well. I'm definitely staying to listen. There's no question about it.
Well, people also know if they're pressed for time, they could watch the video on our YouTube channel.
Of course. A few hours after we finish the webinars, because we first need to render and do some editing. Everything is posted on our YouTube channel. If you go to YouTube and type ForexAnalytix, you're going to find our channel immediately. You can find everything posted there, and it's really worth watching some of those interviews. Okay, can you see my screen, Dale?
Yes.
Okay,
yes.
Let's start by... Hey, Grega.
Hey, how are you?
You see
Hi,
one
Grega.
word and I knew it was you.
What?
Good, mate. Good.
Okay, so continue.
If you have limited time, you can go on, and I can take it afterwards.
Okay, sure, no problem.
Okay, go on then.
Okay.
Let me make you present.
Ladies and gentlemen, the Wizard of Waves, Grega Horvat.
Indeed.
Thank you, Dale.
We can see your screen, by the way.
Actually, I am on the laptop because I have some issues with my desktop computer, so it's really this laptop working charts here is really a pain in the ass, but I was able to get my charts here, so I will be able to cover what I want to look at. Actually, what is really interesting is euro-dollar. Now over the last few days, actually on Monday, we anticipated a free wave decline. I also posted this on FA page for members that we expect minimum free wave drop. And when the prices was trading here at this lower trendline support, I just noted that it's important do or die zone. Either this trendline will be broken and confirm further sell-off to an extended wave free, or we will see a turn to the upside. So based on trading decisions...
If I may add to that, at exactly those levels, I also had a horizontal support zone that had been tested previous times in the past and had worked really nicely. So, that's an extra confluence of what you're saying.
Okay, so actually what I wanted to see based on trading is either a bounce or a breakdown. So we have seen a nice bounce towards the upper side of this corrective channel. Now, for those who are familiar with the Elliott waves will know that counter-trend movements are normally slow, and that's why they are contained within these two parallel trend lines. And since there were no extensions to the downside, I was quite confident that this was just a corrective setback. So actually I shared PIP this morning when market was trading 60-70 pips lower, and so far we have seen a nice push to the upside. Actually, I just made an update on our stream to make a new invalidation level, because as you can see we have seen a new swing high. So actually this was my intraday count. Potentially we have seen a low of wave 2. So if anyone is long on this trade, then definitely this level at 1.163 should be monitored very closely, because we know that if we see a break of this level, then definitely we are not going higher just yet. Maybe then we will see something more complex, but
like a double zigzag, Greg, for example.
This previous pattern. Yes.
No, I mean, if we move lower from here, then it's not a wave 3, and perhaps it's another ABC, right?
Another ABC, or who knows, maybe even a triangle. A big triangle. If this would be wave A down to 1.107, then wave B, C, D, E. So,
True.
But in either case, then we would track a complex correction. So my idea is that sooner or later we will see a new push to the upside. And for those who follow me on Twitter, I also highlighted this very important level that I think should be watched closely. Here from November 09, it's 1.13 actually. So that's the level, as you know, when Trump won the US elections. So I think that there were a lot of important orders here, and definitely a lot of stop orders above this level. So I expect this to be tested, maybe spiked out and then turn to the downside. So for the short-term waves, I think that there is room for another 100 maybe, let's say 70 to 100 pip rally to the upside. So short-term invalidation level here should be tracked, as I said, very closely. If we get below that, then we will see something more complex. Also, other markets, correlated markets, suggest the same. If we take a look on dollar-yen, there's also room for more weakness. I'm tracking here potential free wave drop in wave 2, but there is an open gap from April, so it suggests that dollar will continue to weaken, which is matching with euro-dollar view, and clearly here on intraday chart we had a free wave bounce. So minimum expectations suggest that we should go below 110.23. Also dollar index, if we take a look at that one, is also, as you can see, clearly in downtrend. There is no reason to fight this trend after yesterday's turn down. So I think that we are going lower. Currently we are close to this trend line support. Okay, so it looks like a bear flag here, and I would not be surprised if we see a breakdown today, maybe maybe a new lows till Friday when we have non-farm payrolls report. So fifth wave could be a failure breakout to a new low, let's say maybe on Friday, as I said. So what I see at the moment is still more dollar weakness ahead, and hopefully we see euro-dollar breaking to new highs.
Nice looks.
So also we can take a look on dollar CAD, what is doing. Dale, if you recall, we were looking at dollar CAD and paid attention to this wave 4 correction to 1.350, and we have spiked to that zone and turned down, but still this lower trend line support is holding very well for now, as I see. So maybe we should pay more attention to wave 4 swing high of a lower degree, which means at 3,540. Always when you have fourth wave pullbacks, I think that these levels, swing high, swing lows of a previous substructures should be very important. So 1.3540 is, I think, very interesting level from where we could see a new reversal to the downside. There's definitely a nice formation of lower lows and lower swing highs, so clearly it looks like that we are in some at least temporary downtrend here. Crude oil has a strong impact on this market as well. Dollar CAD is sideways because crude oil is trading slightly to the downside. So when crude oil...
Actually,
yes?
we have more levels of support here in USD CAD. I'm going to show it later, but I think it's telling the fact that USD CAD is only 0.2 higher today, but on the other hand, oil is has already had quite a strong move lower. I mean,
yes.
This market for sure doesn't look strong for the time being.
Yeah, so
it's like the weak dollar forces are overpowering
exactly
the correlation to oil.
Yes,
exactly.
So it means that when crude oil will potentially bottom, that we can expect a strong move of CAD.
Exactly.
Yes, so actually I was talking about this reversal in 3 waves down. Last week we have seen a nice breakdown from this wedge called ending diagonal placed in 5th wave. So it was sharp decline for a wave A. Now normally in a 3-wave retracement, in a corrective movements, you will see wave A very sharp and wave C normally slower compared to wave A. Okay, so if we just draw this line to make a better presentation of what I'm talking about. So this was a very sharp decline, and if we now compare to wave C, you can already see that this current weakness is not that sharp. Okay, so normally that's the case in a corrective pullback, because in a final leg of a corrective retracement, you will tend to see lower volume and decrease in momentum, which is normally the case before market changes the direction. So as far as this goes, it looks very well, because I think that there is a chance that crude oil will bottom, let's say around 61.8% of this previous 5-wave rise. So if we reach these levels and then turn to the upside, I think that this could be then timing to look for some CAD trades, which means dollar CAD short. Okay, but we are already here very close to wave A lows. So once we will have 5 sub-waves down within wave C, that's when we should pay attention to potential reversal signs. So anything else? Does anyone want to
tell us? First of all, somebody's asking what's your target for the fiber for Euro USD?
113 something, wasn't it?
The upward levels. As I said, first target would be here. This, as I call it, Trump level at 1.13. But of course, it's not just a price level. It should be based on structure. Until we see 5 waves up, let's say from 1.107, that's how long we need to stay on the bullish side. So when we will have 5 waves up, only then I will look for a bearish reversal. Okay, make this sense?
You have a quick Kiwi look? Someone's asking. And you better answer, because his last name's Stalin. And we don't want and we don't want you to have to go to the trader's gulag.
Yeah.
Yeah.
So yes, actually this pair is very interesting. First thing, on a daily chart, what we see is the price is rising quite strongly this week, actually for the last 2 weeks, but we are at this trend line resistance. So potentially we will see a move to the downside. This is just based on poor technical analysis, but from an Elliott wave perspective also, what I see is 5-wave rise here, an ending diagonal in 5th wave. We are at this former wave 4 resistance level. We spiked above it. So what my suggestion is to look for this 3-wave of retracement. Also on a daily chart, this is technical chart. We are now at 200 moving average on a daily chart. So also I think that there is some resistance going on here that could potentially take us lower. Also,
maybe back to your orange line and then make new highs.
Yes, definitely a pullback, Normally,
69.70 is an important level in general.
That's what I was talking about earlier.
69.7. Yes, that's actually 50 period moving average.
Okay.
Around there. Yeah.
No, I'm not saying it because of that. We've had plenty of resistance and support from that level, and yes, it's also the 50 DMA. I think 69.7 is a good downside target if we see a rollover, and I already, as you see, the daily candle has already transformed from a bullish candle to a spinning top. So let's see what the rest of the day brings.
Good stuff, Grega.
What? Excuse me, Dave?
Good stuff.
Good
stuff, buddy.
Okay, I didn't hear. Okay, so actually on New Zealand dollar, maybe there is potential for more upside, but as I said, after a 3 waves of retracement. In fact, if we see a sharp fall, because that's an ending diagonal, and if you remember crude oil, it was similar pattern, 5 waves up, ending diagonal in 5th wave, and then we have seen a strong drop in just few hours. Okay, so I would pay attention if we get a decline, let's say back to 70, then maybe I would pay attention for shorts after this wave B corrective rally, just for short-term view, to catch maybe wave C to the downside.
Combining the two views, do you think that we have some last pushes higher for crosses like Euro Aussie, Euro CAD? Especially those two are actually almost breaking too.
Yes, I just think that we are going into some 5th wave. I'm trying.
Exactly, because that's what I'm seeing as well. That's why I'm asking you.
Yes, actually, I'm trying to match this cross pairs, euro cross pairs with euro dollar. If we see euro dollar moving into 5th wave and hit that 1.130 level, where I think that upside could be limited, that's when other euro crosses could also see some reversal signs as well, because all of those euro crosses are trading perfectly actually with the euro dollar.
Okay, one more if you have time. People interested in your gold view, Grega.
Gold, I'm bullish on gold. Currently, it's a little bit sideways price action, but I think we could continue higher. Here we probably accomplished this flat correction back to May lows, and what really is interesting is this bounce, which was quite surprised for a lot of traders. So it was quite impulsive reaction to the upside, and now we are just not moving much, but I think that there could be a flat correction going on for wave 2. So I'm just watching this one a little bit closely, but should wait on this wave C drop back to 1245 level. Now in a flat correction, normally wave C will be very strong, but normally it will stop around previous levels of wave A. So 1245 is the level where I'm looking at and expecting a bounce from there.
Thanks so much, Grega.
Everyone,
thank Grega for taking us through all these different instruments this morning, getting a great Elliott look.
As always, very nice having your view as well.
Actually, no, Dale, that's it. This is what I wanted to show. So,
okay. If you could see the question box, everyone's thanking you, Grega. Thanks for coming in and sharing it, buddy. Great to be working. Great to be working with you, partner.
Thank you. The same to you with you. Okay, I will pop your screen. Okay.
Okay, we'll turn it over to.
I'll take it. I'll take it. Don't worry.
Steve Volge.
Okay. Except Nick, if you want to view something else before I take it.
Give the screen to Velu.
Oh, good. Thanks.
Yeah, Velu, it's your turn. Come on. I actually told him, I have to say a story here about Velu. With Velu, we were having a good view at Bitcoin when it was down at 200.
Yeah.
From more or less what we would call a fundamental perspective. So we were doing a lot of calculations. I think I've said that in the past, but I didn't mention the name. Velu is working.
He told you to buy it there.
No, we actually made, the calculations and, having to do with what you need to, to buy, the processing power you need, plus what kind of an electricity bill you would have even at the cheapest possible solution for having electricity, or for countries that have cheap electricity. And we had found out that at $200, you, at best, if you had, let's say, free electricity somehow, at best you would break even. So it was, we came up to the conclusion that there are two things that can be happening with Bitcoin. A, it's either not going to survive, or B, if it survives, is because Bitcoin was not being used actually because it made sense to create Bitcoins, but it was being used as an illicit means of, storing wealth or whatever. As it seems, as usually, the forces of demand and supply, since at $200 it made absolutely no sense mining Bitcoins, the price went up. Of course, from since then it has gone 10 times up. So that's obviously something not to be expected. But
what kind of shovel do you use when you're mining for Bitcoin, or drill?
It's a special shovel.
Really? Do you have to drill for them? Like, go into...
Yeah, almost.
Where's the mine?
Actually, there are special Bitcoin miners. You don't need to do it with an actual PC. There are like mini PCs that just do that thing. You don't. They don't.
They have a light on their helmet. While they're sitting
yeah.
And you know what it takes? It takes a lot of electricity to do it.
A lot. And that's why I said, Nick, that we had calculated that actually at $200 it made absolutely no sense. I mean, the electricity bill would actually get you under if you try to mine Bitcoins. Plus the fact, I don't know if many know it, and I wasn't here yesterday when you were talking about it because I was in a meeting with the head of development. I only popped up for 15 minutes, but Bitcoin mining, the algorithm of Bitcoin makes every single new Bitcoin harder to mine than the previous one. So that means that you need more computing power to mine the next Bitcoin, and then more to mine the next Bitcoin, etc. That's why, for example, you cannot even, you even need money to replace your Bitcoin miners, let's say on a yearly basis, because simply what's state of the art this year will mine you X Bitcoins, let's say, per given period of time, but next year it's going to mine you a lot less than that. So you even have replacement costs. Anyhow.
And also, Steve, I don't know if you heard it, but one of the reasons why it can do what it does is there is no short selling in Bitcoin. You can liquidate, but there are no shorts in Bitcoin.
Yes, and until if they decided to put it in an ETF or whatever, yes, there is no short selling. You're absolutely right about that.
I think you can with some brokers. I actually think you can.
You can nowadays, Nick. You've been following it way more closely.
I think you can, yes, I think you can. Not with every exchange, but on a couple of the exchanges you can if you have enough margin, yes.
So then probably the truth is somewhere in between, that you can, but it's
certainly not
limited.
easy to short, and you certainly can't do it on all of them. Yeah.
Yes. Okay. So that makes sense actually. Okay. That being said, and since this is not our main focus, let's go viewing a couple of things that we already talked about. Pound yen, by the way, I see an orderly. That's what I wrote a couple of days ago in the analysis. I see an orderly correction lower. I still believe that this is a long, but that doesn't mean that it is a long from here. For example, we have a nice confluence here of the 61.8. and the descending channel around 140.40.
That's what I'm waiting for.
Yeah. So perhaps
that's Grega's view too.
Yeah, I'm with him there. I'm unconvinced that this thing is over. I'm also in total agreement with Nick that says that pound is up for a choppy ride. So combining those, yes, I'm more likely to expect lower prices before finding a great level to buy. As I said, for example, one level to watch is this one, 140.40. So that with this. Let's go over palladium because a friend asked some days ago as well. I had said that I had taken half profits here at the close of this day. So I took a little bit more than $20 of profit. The rest of my half position was stopped at break even at 7.95. Now the question is, friends are asking me if I'm looking to reshort. I'm going to say the following, that since this wedge line proved important, the support, we also have this inner line. I'm watching, first of all, current levels around 8.15, but I don't have a trigger yet. So will I be looking to get involved again? Sure, why not? I took a nice profit from the first position. I'm interested to see it again, but I need to see either a rejection again from the upper ascending wedge trend line, or a rejection from here that we have the inner trend line, and then I might be interested again. So yes, I'm still monitoring, but I don't have a reason to be short once again. But I like the fact that it still keeps being very technical. I mean, this line held very nicely. It looked like we were breaking down one day, then we reversed, and then this happened. So I'll keep monitoring, and I'll tell you if I take another short, why not. Yesterday, if you remember, Dale, I took half profits in silver. I think the momentum loss is more than obvious. We can see it today as well. We've made plenty of attempts of actually breaking above 1740, but we seem to be unable for the time being. We have support just below us here, but I doubt it that, you know, we're going to have such a shallow retracement. I also posted the 4-hour chart, which showed very clearly that we have some kind of an ascending wedge. I'm cautious with metals at the moment. I mean, I would easily expect some kind of a correction lower. Now, is that going to be small? Is that going to be big? We're going to see. But I'm expecting some kind of a correction. What else? Let's have a look at the euro briefly, because you know I've been bullish for a long time, and I'm on board with Grega. We're still holding this ascending channel. This is the zone I was talking about, this horizontal zone that he said that he has an ABC. I agree with that, but we also had this zone. So for the time being short the Euro USD makes no sense. I mean, there is no technical trigger to say, oh, yeah, this is a good place. Even USD CHF, if you have a look at it, I don't know if you remember, we had a look at it when it was rebounding, and I said that, listen, after this move and after the break below this trend line, I'm definitely bearish. So worst case scenario, I expect a retest of this confluence up here. We didn't even make it there. I mean, we had a couple of days of a rebound after finding a bottom around 0.97, and look at it. It's more than obvious that it wants to register new lows, in which case I would be looking at this trend line that passes from around 96 for the next level of support. But it's more than obvious that this was just a bear flag. I mean, it was underwhelming, the reaction. I expected that, yes, it could move a little bit higher, but just to imagine the 223.6 rejected us. I mean, shallow retracements usually show a strong dedication to a trend, and this is what I see for the time being here. Cable, I was expecting, and this is not over yet, although today's candle is a little bit troubling. I expected that the correction lower can easily take us to 126. For the time being, we have been striving, but we're holding. This is the 4th day in a row that we've been holding this horizontal zone, which is around 128. As long as this zone holds, obviously there is no trigger to be short. But if I had to choose, if we're going to see another leg lower before going higher, I'm still a proponent of that belief, so I would still not be long here despite this zone holding. I would be more comfortable being long again lower here. 25.90, 26, we have this broken trend line. We have the 200 DMA. We will have had a bigger retracement. I mean, I will like it way more as a level. Now, having to do with oil, I know that Grega went over it, and if you remember, we had seen it together. When I was in Cyprus, we had set up here that this is a nice level to move lower, and I said that I would be liking this zone, and I had actually drawn a line that showed, you know, a move down here and then a new high. But then when we had this massive day, I said that the way we dropped down, I'm expecting another leg lower, and then I drew this kind of a move, a rebound and a move lower, and we actually had exactly that, but it happened way sooner. We had a rebound, and now I'm also expecting another low, 47 roughly, $47 is a good level to expect a rebound. Now, is that rebound going to bring us to new highs? Perhaps. I'm going to wait and see. For the time being, I'm expecting, you know, lower prices, and then a reaction of the market. Now, if that reaction is going to prove to be impulsive, as Grega's main scenario is, so a move to new highs, or if it's going to be another choppy move to the opposite direction, we're going to find out. But I'm definitely expecting a reaction from somewhere here, from somewhere around $47. Dollar yen, yes, dollar yen. Dollar yen actually is, in my mind, quite clear at the moment. It wants to move lower. It can easily just be another move lower before going higher, but we've had some kind of a bear flag, let's say, which we seem to be dropping below. It's obvious that there is no real bid for it. I mean, especially considering also risk appetite, which remains high, etc. Yen is not reacting as somebody would expect. It looks and feels very heavy. So until further notice, I see nothing bullish on the short term, because I'm not forgetting, and that's why you always need to take everything into perspective having to do with time horizon, time frame you're looking at. I cannot forget that we've had this impulsive move higher. I cannot forget that we've had this multi-year impulsive move higher, which means that in the short term, in the very short term, I'm bearish from the technical picture I see here. Now, if we're asking about the medium term, no, I could not be bearish. I'm currently waiting and seeing if we're going to get a strong reaction higher that's going to indicate that this move lower is over and we can expect another move higher. So that's my position in USD yen, and I have no position because it's mixed. I have a different thesis for the short term and the medium and long term, and usually unless I take something as a counter trend trade, which is obviously short term in nature if you look at it like that, I prefer to see, you know, short term and medium term analysis align, because that means that if you're right in the short term, there is a good chance that your trade might evolve and bring you more profits on the table than you initially planned for. So that's one of the reasons I have no position currently in this.
You think it could trade down to your support level of 105? And that would still not negate your long-term bullish view?
I would be worried if it trades up to here, but if it still holds this channel, yes. Yes, Dale,
okay,
for sure.
Because that would have some equality from the first break from 118 to par.
No, definitely.
14 and a half to 105, 104.
Definitely, but as we've said plenty of times, it's not only price and extent of movement I'm watching. It's also, yes, exactly, how it gets there.
And where the bonds are, and where the bonds are.
Correct. And
okay. Yeah.
And that also answers, you know, I often get questions on Twitter, like people asking me, when would you be selling that again, for example? I've had that question for Palladium. You know, I can give a level that I would be interested for. I said since it was at 805, I said that I'm interested to see 815. but 815 is a level. How we get there is the other 50%. You know what I mean? So I have levels I'm monitoring, but I also need to like the structure.
Yeah. Okay.
Having to do with bonds, since you mentioned it, bonds remain, the bond remains choppy, for example. Yes, we've had a strong reaction. I was also monitoring here, that's why I have this trend line. This, if you look at it, is also an inverted head and shoulders formation, which should take us a little bit higher. Today's reaction also at the initial sell-off shows that there's still good bid in the bonds. We've already had 5 consecutive days higher. The situation with treasuries is a little bit more clear in my mind because we've had a double bottom, we've had then an important zone, we're holding above it for the time being. In the short term, I see nothing. I know the Fed is going to hike and yield prices are going to go higher. I've heard that a billion times, and yes, we've had a very strong move lower, but in the short term, I don't see a short setup in the
they
treasury.
still look good. Like Greg had pointed out, that 113 level, Steve, which was the high of the euro on November 8th. So
Yes.
a parallel level in TLT would be about 129, 128 is where they were prior to the election. So you're having a lot of things retracing all of the gains or losses they had since the election. To me, it makes sense, and that's you have 61.8 back at 130.10, and that's a 10-year note. But if you use TLT for a proxy, there's a huge breakaway gap, a gap that could be filled up around 130.
But by the way, let's not forget what we had said. You are absolutely right. A lot of instruments are retracing their movements, their post-election movements. But one fact remains that stocks seem to be in a completely different universe. Yes.
Yeah.
I still believe that Nasdaq is very, very close to a topping formation, at least for the short term. I don't mean that this is going to be
today.
For the time being,
I'm telling you, it's today. Mr. Pinkert is saying it's today.
Okay, I'm absolutely fine with that. I'm absolutely fine with that. But you know something? I see predictions today. I made a comment about a specific account that was writing that there is a thesis, there is an Elliott wave thesis that the markets are going to top in 2022, if I remember right. And I have to make this following comment.
Predictions?
Theoretically, anything is possible from a theoretical standpoint. But I have to say something. The National Bureau of Economic Research is keeping business cycles data since 1854. Okay, that goes almost a couple of centuries back. So in the data we have since 1854, we have never had a business, the expansionary part of a business cycle that lasted more than 10 years. And actually this has happened once. The average business cycle and the average expansion of a business cycle is a lot less than that. So predicting, for example, that the stock bid is going to go on until 2022, since we are officially in an expansionary stage of this business cycle since 2009, June 2009 to be exact, is like predicting that we're going to have a 13-year expansion in this business cycle, which besides being a first time ever for as long as we're holding and keeping data, I also want to ask the average person that is listening in and is actually a participant, a civilian in Western, most probably, economy. Do you really feel that we are living in the strongest business cycle we've had since you remember? I think we can all agree that not. Yeah, so sooner or later, stocks have to reverse because sooner or later, I think now that the Fed is hiking is, we're at the last stage of this business cycle. That doesn't mean that it's going to end in 1 month. It can last another 6 months, another 12, another 18 months. Do I believe it has a chance?
It would actually be healthy to have a reset and then a continuation.
Let me tell you something,
I mean,
Dale.
even back to 1950
yeah,
or something.
let me tell you something, Dale. Let's make the assumption that having this expansion last until 2022 is possible. If you ask me, as a professional opinion, if I would want to see that happen, I would tell you I would be very scared. You know what I mean?
Yeah.
I don't want to see what kind of bubbles we will have inflated until then. And, the break of the system then is going to be spectacular if that happens. Just my personal opinion. Mark, that you have coming up in 3 minutes, is, the best person you can make this discussion with.
Okay,
sure.
I'm going to take why don't you keep going for a few more minutes, partner? And so I could take a quick break, and then we'll start the interview with Mark Yuska.
Sure, absolutely.
Okay.
By the way, as we see, indeed, the Nasdaq is showing a very nice key reversal, but it's very early in the day. I'm just saying what the daily chart tells us until now, but daily candles, you have to take them, you have to take them into consideration after they close, obviously. Okay, questions. What do we have? Who wants to see what chart? Let me have a look so we can go over. Oh, my opinion. I knew that somebody's going to ask me about this. I hate it. Aussie Kiwi. Strong move lower. We've broken this descending trend line. I haven't been involved with it. I was long in this first leg higher, and then I took another long. Got stopped at some point at break even. I don't remember when it was, and to be honest, it moves so slowly that from the point I remember that I was looking to take a long until now, my son was at the stage that was being born, then breastfeeding, and now he's about to go to the army. No, I'm kidding about the last point, but I mean, very often it moves so slow that it's very hard to notice. I can tell you one thing. Now that we've broken below these levels, if you're looking for support, you can now find support at 1035, and which is also going to coincide with this ascending trend line we have. Obviously, if we break below this trend line that provided support as long as we were creating a triangle, this thing is bust. And yes, I do expect some kind of a bounce, and I do expect it, rather soon. But I'm honestly not involved with this, and I'm just having an eye, paying attention to it like once every 3 days or whatever. So personally, I see no setup that I like at the moment there. And even when I see some, I'm very reluctant to take it, because very often you commit part of your account in a position there, and it moves so slowly most of the times that it makes you feel like it's a waste of capital. Now about Aussie. Eugene, both, because I don't want people to get bored of listening to the same things over and over again, both Greg and I went over the Euro USD. You can see on our YouTube channel the analysis afterwards. Bottom line, we don't see it turning lower yet, but you can see the details in the recording of this webinar. Now Aussie USD. We're holding this descending trend line. It's undoubtedly very choppy, but what remains as a fact, and we had said it since the bottom, I had said back then that we should see a bounce to 74.50 to 75, and we are holding this. As long as we are below 75.10, I cannot, from a technical perspective, be bullish. No way. No way.
Thank you, Steve.
Okay. Mark is ready? Good.
Yeah. Mark, I'm going to make you the presenter right now.
Perfect.
look
And
forward
welcome,
to
Mark.
hearing your voice. And you do have a screen share option. I never received slides, or I would have shown them for you, but looking forward to speaking to you, Mark.
All right, can you guys hear me?
Can hear
Yes.
you loud and clear,
And
Mark.
welcome.
All right.
So, Mark, great to have you here in face. I want to thank you very much for taking time out of your day to hang out with us and talk to us about your thesis. I thought it was a great presentation that you did on CNBC, talking about your constructive views on emerging markets. I think even that day you were talking about some Brazilian stocks which were under severe dramatic pressure, may have been Petrobras. So in light of that, what's your reaction to Goldman Sachs's buying Venezuelan bonds at default risk prices, already pricing in a full default, billions of dollars at 31 cents? What do you think?
Look, I think there've been a lot of players out there that have been, how should we say, picking over through the rubble in Venezuela, and it never surprises me that Goldman Sachs shows up when the stuff gets really cheap. So I know they're taking a lot of grief for it in the media, but I love, one of my favorite lines is what Howard Marks says, that there's no investment bad enough you can't make okay with a low enough price. So
okay. Yeah, you can't. They say default is already priced in at 31 cents.
Yeah, and look, that country does have assets, so true default is, I would say, is not a high likelihood. Look, they can do anything they want. Argentina did it, but I think people have figured out that if you default today, you become unable to access the public markets, capital markets, and that's a bad thing. So,
well, they've done it before.
Stories Argentina in that regard.
Yeah, and hasn't Venezuela done it before in the 80s?
Yes, and I think
and Brazil. I mean, they're all very experienced defaulters.
Yeah, exactly.
Well, let me ask you this: is the U.S. going to have its virgin experience of default down the road? Because what I heard you say is the reason you don't like the more mature, developed nations markets is they're still going to have to deal with deflation. Where some of these Asian economies where the demographics and growth are different, they're not going to have to deal with those issues. So do you endorse Gunlich's pair trade of being short the U.S. and long emerging markets?
Look, I do. I definitely do. The one challenge of it is the short term, right? Whether we like it or not, global investors still believe that emerging markets are more risky than developed markets, even though the data doesn't support that. And so what I find challenging in the current period is, I think developed markets are extremely overvalued. I mean, you guys were talking about how late we are in the business cycle. I couldn't completely agree. And given valuations, particularly U.S. valuations, at not the stupid levels of 2000, but getting close. I mean, worse than 1929, now approaching 2000 valuations. And there are certainly some stocks like the FANGs that I would argue are priced exactly like 2000. So short the U.S. I like. Maybe not today, maybe after the final phase of this bubble blow off top occurs over the next few months. One of our theses is that the fall is the time you really want to get short and get out of the market and go to cash, et cetera, in the U.S. But as far as emerging markets goes, we love them. We've been very long them. They've done very well this year. The challenge is in a short-term correction, they will go down. And in fact, they might even go down more than the U.S. So I'm not sure that pair trade is going to work in the short run.
All right, let me ask you this, Mark. does the fact that it looks like the dollar bull market may be over? I know there are still some long-term dollar bulls, even if we work lower towards Dixie 92, that still thinks there's one more blow-off wave in the dollar. Is that part of the thesis of weakening U.S. dollar, stronger emerging market currencies? You with me? Hello, Mark? Mark disappeared.
Dale, Mark seems to be still online, at least on the platform, and his microphone seems to be on.
I don't even see him showing up on the attendees.
Oh, on the stuff he does, actually.
Let's see. No, I don't have him under attendees. Mark Yuska. I just have
he's under staff, though. If you see the right column that says staff.
He's on staff?
Yeah.
I see him, so I don't know what happened. Hello, Mark, are you there?
Mark, we can't hear you if you're speaking.
I think he lost the connection.
Oh, he's trying to connect.
Oh, you know what? He did it over the phone. Or now he's calling.
Okay, he's probably trying to reconnect.
Okay.
Okay. So what was Mark was saying? Here he is.
Hear me?
Okay.
Yeah, you're back, Mark. Are you doing this by phone?
I'm not quite sure what happened. I apologize, guys.
That's okay. You know, we have to adjust all the time, right? So are you doing this by phone? So if you were doing it on your workstation.
I was on the computer, and the tech guys were doing something to try to get my screen to share, but then I just vanished.
Okay.
So,
all right. So we'll conclude this interview without the screens. I was asking you if you believe the dollar has peaked. I know a lot of long-term bulls hold out hopes, even if we continue lower in the dollar for a while longer, there's still going to be a blow-off wave to the upside in dollars, predicated upon most debt is denominated in dollars, and it's going to generate huge demand to service that debt in dollars. Are you a dollar bear?
Oh, no, I've been one of the lone wolf voices on being bearish on the dollar for a while.
Okay.
Took a lot of heat last year. We came out with our King Dollar Dethroned thesis in January of 16, and then we came out with the kind of the King Dollar last stand this past January. And
did you
during
send
that
those
whole
off
time,
to? Did you send those off to Larry Kudlow with a box of Kleenex? Since he coined the term.
Oh, really? All right.
Oh,
well,
yeah, King Dollar. That's Larry Kudlow's.
All right. Well, I will definitely do that. But what's interesting is the dollar basically has been dead money since January, February,
right.
After the first rate hike.
Right.
It hit 100 after the big rally at the end of 14 into early 15, and it's basically been dead since then. And now it's on a downward path. And that's normal, right? When the Fed raises rates, historically, that's not dollar positive, it's dollar negative. The dollar tends to rally before the Fed hikes and then falls afterwards. But look, there are some really smart guys out there that believe that this whole, dollar imbalance, and you mentioned the dollar denominated debt problem,
right.
is going to be a big deal, and there's going to be this rush for dollars. I actually don't see it. I see it going the other way. I think the fall in the number of petrodollars, the fact that the U.S. is now exporting oil, that our production is rising rapidly, is reducing the demand for petrodollars around the world. I think the Chinese have been moving to do more transactions globally denominated in renminbi as opposed to converting to dollars first, as they become a world reserve currency. I think long term they'd like to be the world reserve currency, but that's a long way off. So I just think the dollar is going to be structurally weak, and I think it actually has been structurally weak since they closed the gold window in early 70s, and we've had kind of 3 cyclical peaks, but the downward trend secularly has been down, and I think it's going to continue down.
And this was a pretty weak rally from 70 to 104. One of the weakest.
Absolutely.
Yeah,
it was the weakest for sure, and and we made we've made a series of descending highs over that 40-year period, and they've been weaker and weaker each time. But look, the developed markets are in a race to the bottom. They only have one way out of what I call the killer Ds. They have bad demographics, too many people turn 65 every day. They got bad debt, they got too much debt, and then they've got horrible risk of deflation as opposed to inflation. So you put those 3 things together, the only way out is to devalue your currency, and that's what the Japanese are doing, it's what the Europeans are going to do, it's what the Americans have to do, and that means emerging market currencies should strengthen, which means positive for them.
Mark, it's Steve Bulgaridis, if you can hear me. The 30 you talked about, the deflation, is the result of bad demographics mostly, correct?
Yes. Yeah, absolutely. And it's the result of the fact that as people age, they are not as productive, and that doesn't mean they're not good people. They are, but they're just not as productive. Yeah, they don't spend as much. They tend to save more. And now you've got the added challenge of, life expectancy rising. So people are going to have to spread out limited dollars over a longer period of time, which I think is going to be incredibly deflationary. And then on top of that, you've got the deflation being exported from countries like China, where they have excess labor. Look at capacity utilization all over the world. It's just in the dumps and not getting better. We have excess capacity of everything. And I think it's only going to get worse with robotics and AI. And it doesn't mean there won't be great innovation and great wealth creation and great opportunities, but from the traditional manufacturing strongholds around the world, I think those are going to deflate for many, many years.
Since you mentioned of China, doesn't it worry you a lot that China's hidden and obvious, the combination of problems might actually cause the emerging market thesis to implode?
There are a lot of people that believe China's going to have a hard landing and that's going to have contagion effect. I'm actually not there. I kind of look at China very differently. To me, China is much more of a developed market than an emerging market. It's the second largest stock market in the world, and there's no inclusion of their local local RMB shares in the MSCI World Indices. That's going to happen at some point. Think about that. I mean, it's the second largest stock market in the world, and most managers globally don't own any local shares. So that's going to change, and that's going to be positive demand for their securities and for their businesses. And you look at their demographics, it's much more like a developed market than an emerging market because of the one-child policy.
Because of the one-child policy all those years.
Yep. So when I talk about developing markets, I'm really talking more about places like India, Pakistan, all over Eurasia.
How about the Philippines, and what would be your favorite currencies to own against the dollar decline?
I really like all of the Asian currencies. I know people hate Asia, and I know people fear the renminbi deval, and they think the Hong Kong dollar is going to bust, the peg. There are a lot of people on again, a lot of smart people on the short side of all of those currencies. I would take the other side today. I just think that the dollar is going to be meandering down, and I think those other currencies are. Look, they took a lot of pain for a lot of years. The Brazilian real took a lot of pain. Yeah. The Korean won took a lot of pain. The ringgit took a lot of pain. But now, if you look, the rupee took a lot of pain in India. But if you look around those countries, they have strong leaders. To me, that's the big difference between, countries that I like and countries that I don't like, is leadership. when you have bad leaders at the top, it's really tough for markets to do well. Now, you can take care of it like Brazil.
Would that include the Philippines with their leader?
Yeah, no, the Philippines is less interesting to me. I like Indonesia much better. I like Malaysia much better. The Philippines guy is he's
crazy.
Bad, but
crazy,
he's crazy. Yeah, there's no question.
How about the North Korean currency?
Yeah, I'm not a big fan of North Korea on many levels. Although, look, I think what I find curious is I went to a presentation before the election, and this guy was a insider. He was like the Assistant Secretary of Defense. There's probably more than one of those, but he was one of the Assistant Secretary of Defense. And he was giving this speech, and he was talking about how over the next 12 to 24 months, the big risks were going to be in the South China Sea and the islands in the South China Sea and North Korea. And everybody in the audience is like, what are you talking about, North Korea? North Korea is a non-issue. There's just nothing there. And now here we are talking about North Korea every single day. And it's really interesting. And if you think about, governments and what they do, in my mind, to kind of get out of difficult times, is they tend to agitate and in some cases even attack. And so if you go back and look at Afghanistan, Afghanistan's been occupied either by the U.S. or Russia for 4 or 5 decades.
Yes.
You just take turns. And it's really good for your economy if you drop a lot of bombs in the desert. So if you look at Russia, they were having a big recession. What'd they do when oil prices fell? They started dropping bombs in the desert in Syria, and suddenly they were out of recession. So I think it's interesting that we're saber rattling and dropping big bombs in Afghanistan again, even though supposedly we pulled out, as a show of strength against North Korea. So I don't know. It all seems very strange to me that there's like a dance card of global altercations that's filled out before they start.
I know this might be outside of your wheelhouse, but what do you think it means with this mania that we're having in crypto now, Mark?
Look, I think it means that people are nervous. People are looking for stores of value, and gold and silver and other precious metals have been that. Gold has been a store of value for 5,500 years, and people say, oh, it has no yield and it has no value. It's just a rock, and why would you dig up a rock and bury it in a vault?
It's an archaic relic.
Yeah, I mean, look, the reality is people do. A friend of mine just did an interview with the guys that run the secret gold vaults in Switzerland. And he said, if you were to witness what these people go through in terms of, the 9 separate elevators and the 9 security doors and all, you can't put more than 200 kilos on an elevator or it'll stop. The lengths they go to protect this, silly metal says that it has some value. And I think what crypto is a way for people to say, look, if you took all the gold in the world, it fills 2 Olympic-sized swimming pools, and it's really heavy and it's hard to carry around. The same value in Bitcoin fits on my iPhone. So the ability to have something so dense and so portable and so easily transferable and transactable, if that's even a word, is really compelling. And I think, someone posted a great chart earlier today on Twitter that showed how Bitcoin is tracking gold in 1980 almost perfectly. The peak at 800 and then the drop, and people say, oh, well, that proves that it's bubble and it's going to. No, what it says is people are starting to accept that it is a store of value, and it's going to have these cyclical peaks and these bubble peaks. But today, gold is higher than it was 20 years ago and 40 years ago and 60 years ago and 80 years ago and 100 years ago. And look, for 5,500 years, an ounce of gold's bought a fine man's suit. Fine man's suit today costs about $1,600. Gold's pretty close to that. So I think Bitcoin. Now the challenge with cryptos is you can create them out of thin air, and so most of them will go bust. And so a lot of people are going to lose a lot of money playing the wrong ones. But if
there's like 400 of them.
Yeah, if Bitcoin or Ethereum or whatever it is becomes accepted by a growing number of people, then it does have the chance to become a store of value. And so, I wouldn't try to trade Bitcoin, but I certainly might tuck a few in my drawer and hold them as a store of value for, 0.5%, 1% of my portfolio. Might do that.
Okay, Mark, I know that your company is called Morgan Creek Capital. Is that a registered investment advisor?
We are.
So
We're registered investment advisor, Chapel Hill, North Carolina.
Okay, so you help people with their more, I would say, conservative funds, looking for growth. What are you telling your clients? I'm sure you're talking to them about getting into emerging markets. Are you having them shift out of the U.S. here? And
yeah, so if you look at one of our standard, one of our standard clients, we are underweight the U.S. and in fact we're quite hedged in the U.S. So we do a lot in the hedge fund space. So we're telling people to get hedged and to resist the urge to pile into this passive indexing ETF mania that we think is going on. We think it's actually quite dangerous, and we can talk about that later. But so we're underweight the U.S. We're dabbling in Europe. We think there are some interesting things in Europe, particularly in the financial space and the peripheral markets, the PIGs, Portugal, Ireland, Italy, Greece, and Spain. We think there's some very interesting things going on in Greece. Then in Japan, we think you have to be selective. They're going to devalue their currency, although I totally agree with some of the comments earlier on the yen. I thought were very insightful that, look, the challenge is, for whatever reason, the yen is still considered a safe haven. I don't really understand why, given that they have 186% debt to GDP, but it still is. And so in a time of stress, the yen will actually strengthen instead of weaken, which is what they need to happen. They need the yen to weaken. But we do like companies like Sony and Nintendo, things like that, some of the exporters. Then in emerging markets, we are very overweight emerging markets. We're broadly overweight both emerging and frontier markets. We're starting to...
What would be an example of a frontier market? Something in...
Yeah, we have loved Argentina for a long time, although it looks like they're going to get put into the emerging markets here later this year. We actually like Pakistan, although it's getting added to the index as well. MSCI has the tendency to do that. They move their countries around, and that actually creates supply and demand, or more demand for those assets. So Pakistan is up a lot. Argentina is up a lot as people try to anticipate those going into the index. But there are other frontier markets that we think are interesting. We think Saudi could be interesting if the MSCI gets around to putting them in the index, which they've hinted about for a long time. I think there's a lot of assets in the Saudi market that are quite cheap because they have a very low equitization ratio, meaning they're the market cap relative to GDP. That's what's so exciting about Argentina. They got a 13% equitization rate versus 130% in the U.S. The average is 70. So both of those numbers are wrong, and we know which way they're probably going to go. Then, we still like the emerging markets. We like the China story, despite the fact that everybody thinks they're going to have a hard landing. I think they're actually growing a little faster than people think. The one risk with China, though, is that they are slowing down the credit growth after a big impulse of credit last year. That actually has some yellow lights blinking a little bit.
And what do you think the catalyst is going to be for a shift in U.S. markets from a melt up to at least, a 10% correction, or more? What do you think is going to drive it?
It's
could it be a weaker dollar, the dollar getting too weak too fast?
It certainly could be the dollar. It's the funny thing about these events is it's always the bullet you don't see that kills you. Always the thing you're not anticipating that causes the stress. But ultimately, I think it's going to be an asset bubble popping. So, in 2000, it was the tech bubble popping. In 2007, 2008, it was the housing bubble popping. I think this time again, it's going to be tech stocks and equity valuations popping. and that's going to feed on itself. And I think the difference, and why I think it's actually going to be a much worse downturn this time than in 2000, is
the Fed doesn't have as much ammo.
Well, that's a great point, really important point. The Fed doesn't have as much ammo, but to me, the most important thing is the reflexivity of ETFs. You know, ETFs are dumb, meaning they're rule-based, meaning they can't think, they have no judgment. So right now these low-vol ETFs are buying ExxonMobil. Okay, ExxonMobil is a diversified conglomerate. It's not an oil company, it's a conglomerate. They have as many businesses that lose money when oil prices go up as make money. So it's never traded for 40 years higher than 15 times earnings until the last 2 years. Now, because these silly ETFs must buy it irregardless of price, it's trading at 28 times earnings. So I think it could fall in half easily, and that could cause a lot of stress. And once that starts, that virtuous reflexive cycle of people piling into ETFs because the prices are rising turns vicious. And you get an 87 type correction, and I think that actually could happen. And I wrote in my recent letter that I think we could go all the way back to the 1929 kind of unwinding, and it could get really ugly if the administration repeats the errors, which they're already talking about. They're talking about tariffs again. Smoot-Hawley were not very smart gentlemen. Now they're talking about
and the Fed started retightening in 37 that took us back down until World War II.
Yeah, look, I mean, we were in a recession from 30 to 37. It was a long recession, but it was a recession. It didn't turn into a depression until the Fed started to take liquidity out of the system and more banks failed. So,
like what's happening now.
Like what's happening now, exactly.
All right, Mark, you know, what a great interview. I'm so glad I reached out to you on Twitter. And anyone that is listening live to Mark, or anyone who watches the video later, this is not a game for novices to pick overseas markets. You need the expertise of someone who's spent hours of research. If this thesis is interesting to you, I recommend you get a hold of Mark Yusko. His Twitter handle is @MarkYusko. His website is www.morgancreekcapital.com, and have an expert like Mark diversify you from, 90% of you listening to me are mainly in U.S. developed markets. If you want to have some geopolitical, economic diversification, I'm very impressed with what Mark has had to say, and I want to thank you for edifying our community today, Mark.
No, thanks for having me. Talk to you guys soon.
All right, Mark. Good hunting, brother.
All right, bye-bye.
Bye-bye. Okay, everyone, that's, did you guys like it? Okay, good. So Kiwi's coming off. Looks like that shark. We could get one more run up here. Here's one, here's two, maybe one more run up here. I favor shorts and Kiwi. Okay, you too, Arif. I want to thank Greg Horvat for his work that he shared today, and Nick for her work that she shared today, and Steve Volge for his work that he shared today. I actually have another pretty good interview came up at the last minute. I'm going to have Cody Willard with us tomorrow. A lot of you that used to watch Fox Business or Fox News probably saw Cody on the air. He has a product called Scutify, where people contribute their ideas. It's a community type of thing. So we'll see everyone tomorrow, see how some of these projections that Steve and I and Nick gave out. I did notice the S&Ps are coming off again. I told Steve today was the day. Mr. Pinkert said today was the day. Let's take a quick look here. Euro pound's coming off. We talked about this as being a possibility. Didn't quite make a third drive. And the S&Ps are off a little bit. Let's see if it could recover from here. I think this might be it. When you look at the 4 hour, You're diverging on the 1. Maybe not on the 4, but glaring on the daily still. Maybe we get a 2-week correction before the big run to new highs, but this looks a little ugly to me. This action right here. So I hope that we've added value to what you're trying to accomplish as a trader. And I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. I'll see everyone mañana. I think Blake will be back with us too. You're welcome, Diego. You're welcome, Russell. See you, Ronit. Alex, Glenn, Arif. Enjoy the rest of your day. See you tomorrow, Morrow. You're welcome, Ben. See you, Fire Pants.